Okay, so today we'll talk about tokenization. I intentionally put it on the second lecture because the topic of tokens became like really kind of overhyped. So basically, we need to like mention it before proceeding. Otherwise, there will be more confusion, like where these technologies like help. So it basically gives you an outline of what tokenization is, what are its challenges, how it was addressed by the market, and yeah, what we can do to improve it, and so on and so forth. For those who haven't seen me, you can check later. So I just put the slide. And we start with tokenization. So basically, tokenization is the process of creation of digital registries. And people can ask, like, what's the difference from existing digital registries that are built using, I don't know, like Postgre database or some other database, it's Microsoft MySQL database. And the difference is that for the system, the tokenization platform, contains a lot of modules that were not present in existing systems like payment system or wallet or exchange. And also all the accounts of the users are managed using cryptographic keys. We've discussed that on the first lecture, that like Bitcoin, like one of the biggest innovation is that the user is a true owner of the account. So because only the owner of the private key can initiate transactions and so on and so forth. So tokenization implies exactly that. So users are like given keys, and using them, they can do changes to accounts. And basically, this system could be anything: the loyalty point program or payment system, like a bank payment system, or it could be the land registry or something else. So, but the crucial difference again is usage of cryptographic keys. So, but a lot of confusion was on the market about what is token. The word token was originally created, like it's actually, token is like token of appreciation. It's like some of, some piece of something that represents, certain object. And in the information theory, like kind of token was a string of letters or string of bits. So basically, when we talked about cryptographic tokens before blockchain, we meant certain like cookie or type of thing, and it was kind of stable, was not changing. In blockchain industry, tokens started to mean completely different thing. Basically, it was some kind of mix of account slash key slash like asset that the user acquired. And immediately, it brought a lot of attention to people who wanted to build certain financial like products. So this picture, it's actually a famous picture from very old book about C++, Grady Booch book. And I think the regulators and general public looked at token exactly the same way. So there was some component of security, so like in a meaning of not precious papers, but investment tool. Then there was a sort like stocks, bonds, etc. There was certain component of a currency where people just paid each other, and the token has certain value, like in dollar meaning or no, and it has certain like commodity kind of aspect, which means that you can have a token, for example, for a painting, and the token may represent a digital like ownership right for a painting. And basically, tokens that were mainly issued on the market, so-called utility tokens, were like a fusion of a few things. Sorry. Quickly. Basically, until regulators started to understand certain edge cases where people try to hide the financial securities behind the utilities, people issued these tokens on like very strange kind of premises. So I know a few ICOs that basically registered in Switzerland, and they said the tokens represent kind of, we accept donations in our company, and in exchange we give users tokens, just like, yeah, it's something. We don't even specify what it is. And later, if these tokens go up, I mean, who knows, like that's not our thing, and therefore it should not be regulated. Basically, they didn't give any warranties to investors. They will not even consider it investors. They will consider it, I don't know, like donation, people who do donations. So in that case, it's kind of the way to pure fraud, and many startups were like structured like that. And some of them, most of them went bust, and then investors obviously were pissed off, and yeah, there was a lot of things, and finally, some US started to punish these startups. That's just history. So we will talk about this, later, what utility may mean and how it should work. That's just how it happened. So many centralized companies issued tokens like exchanges or companies that provided services directly. And yeah, there was a big mess. So, but what is a token in our case? So yeah, it represents ownership of certain asset. We don't even specify which asset because in every case, it could be different things. Sometimes it's, as I said, a fusion of this, of security, commodity, and currency. Sometimes it's a currency, like USDT is a token technically, and it's a currency. It's basically dollar issued by an offshore bank that nobody knows where the money is. Like we know, but it's kind of still not official. And or sometimes token is like represented, it represents a digital art piece, like NFT. So one token means ownership of one particular digital art. So you cannot really mix tokens together because they all represent a different thing. So if you want to think about that, the best real world explanation of a token is the word a thing. So this is a thing, this is a thing, like this green is a thing. So that's the same way of using word token. It's very vague. How it's different from cryptocurrency? Obviously, yeah, I think you feel it already, but precisely, it can be issued by some company or some person. The price obviously depends on the value of an asset. You cannot have tokens separated from everything. So it's always representing something. And transaction processing can be centralized. So that's the, what you cannot mix. Like Ripple is not a cryptocurrency, it's a token. And in their case, it's some form of a currency which has certain flavor of security. That's my personal opinion, that I haven't seen in reality pure utility tokens. They always had aspect of security, which makes them vulnerable for the future when regulators may come in or may not and will impose certain rules. In this case, I'm not protecting regulators that sometimes like slow to understand the technology, etc., but we should name each thing according to its essence. So if our token is paying dividends or growing, like the mechanism that is built in is intended for somebody to make money, that's actually a security. And why securities are regulated? Because people advertise them and advertise like, oh, you will make money investing into this thing. Buy this because tomorrow it will grow. And I haven't mentioned here like a Harvey test. That's a kind of simple test how to understand whether some financial instrument is a security or not. But in reality, some people ask like, okay, I can buy an old car, like an old vintage car, and it will grow. So technically, is it a security? Obviously, no. So Harvey test has 4 like rules how to define, how to understand what security is, and one of them is that when one person invests money, then the asset grows by the actions of third party, of somebody who is doing something to make money. So that's exactly what happens with all the utility tokens. People invest in projects, they do not grow themselves, like becoming old and vintage. Somebody is doing the work. So, and expectations of profit. So most of the projects, again, if you have example, show me the pure utility. Again, I believe there will be times when regulation will be completely different, maybe self-regulation, but at least we shouldn't, like if some project intends to make money for investors, it should say explicitly, and we should not try to hide it behind words like utility or blah, 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 blah. So just do it openly. If you say, I do not trust some big country decisions about like how I should attract investors and deal my users, just do it openly. See. We will talk about NFT-based patents, but there is no special thing. The NFT will represent the patent, and that's it. So kind of NFT can represent digital art or article, white paper, or NFT can represent a patent. So there is no special technology behind that. And you can make NFTs that are splittable by parts. So fractional ownership of patent also possible. So in order to show my kind of ideas, I want you to conduct a mental experiment. So right now, we will create a Ponzi scheme for a shawarma cafe that wants to issue their token and become rich. You will see the parallels for any centralized business, such as exchange, even as a cryptocurrency exchange, that they do the same stuff. So idea is that the business that has some owners issues limited number of utility tokens and provides a discount if the client pays for the services with tokens. That's like 2 things to make this Ponzi scheme. And I don't say like everybody does Ponzi schemes, but I say that it's very easy to build it. And if you're big, then you are, it's much easier to sustain it for a long time. So how does it work? On the day 0, the business issues million utility tokens, does an ICO, sells like 10% at $1. Let's assume that it happened because of good marketing or blah blah blah, and raises 100K. So now business advertises that if you pay with tokens, then our shawarma costs $1 in a token value. And for regular clients, shawarma will still cost like $2. So that's kind of a good discount when you are paying with tokens. The same stuff happens with exchange tokens when you have a discount for trading fees. So it's quite a fair example. So basically on the day 1, on the day 0, tokens were sold at $1. So they will traded, offered at $1 on the exchange. Assume exchange is a like separate entity. Usually these are controlled by the startups that issue tokens. So on day 1, customers start approaching this shawarma kiosk and buy these shawarmas. So let's say the kiosk sold 1,000 shawarmas that day. And customers do what? In order to buy them cheaper, they go to exchange, buy tokens, and pay with tokens. So like if token costs $1, then effectively they pay $1 per shawarma. So 50% discount. And the business covers the production because they're not getting money, they're getting tokens. They covers from production from ICO money. And because amount of tokens is limited in existence, so when customers rush and buy them on exchange and spend them and give them back to business, the supply is shrinked and the price grows. That's how it's pure economics, nothing, speculative. So let's say it will grow 5%. So next day, situation continues, and there's less tokens in free circulation, and price grows again. The 5% is quite conservative, estimate. Then it goes on. On the day 100, the business, we assume that it sold 1,000 shawarmas per day, spent all the money for shawarmas. That's the cost of making it. But the token, if you calculate compound interest, it will cost approximately like $100 if it grows 5% per day. And now, one shawarma costs just 1/100th of a token, because token $100, meaning that $1 is just hundreds of a token. So there will be less than 10,000 tokens on exchange left, but in a free circulation, and the rest are accumulated by the business itself. And technically, the market cap of all the tokens will be $100 million. That's exactly how it worked with centralized exchanges. And just as the easiest example. So on day 101, that's exactly what happened as well. This business goes and sells 5% of the tokens that it had to some strategic investor, fund, etc. And using funds that they raised from the sale, they can expand production. And if they expand production, they will generate more, basically, demand, like more supply, more demand. They can buy other shawarma businesses, and they can push their token market cap to technically to infinity. So yes, they didn't make money in a dollar value, but they increased their market cap. And if they're powerful enough, they have marketing enough, good enough to tell others that these tokens value, like have some value, then they can take loans. That's exactly what happened with FTX. Like people laughed when I gave the same lecture like 5 years ago. It was created more than 5 years ago. People laughed, but now after FTX collapse, which acquired startups using their own token, which took loans against their own token. And then when token goes to zero, they're not laughing anymore. So that's exactly what happened during 2017, 2018, and then 2021, 22 years. So people created artificial financial instruments that didn't represent any true value. These companies could have stocks. So like FTX had its own stock and then own token. Like that's, and you can name other companies that are doing the same right now. And they're just big enough not to be not to fail immediately. So what you can do next, it's even more beautiful scheme. You can create a supermarket. So let's say the owner of the shawarma place says, oh, it's too small for me. I just $100 million, I worth more. Creates a supermarket and says every store has to accept my tokens as a mean of payment. And basically they convince them to hold the tokens that they gave and don't sell them back. So, and obviously, if everybody is holding and if supply is shrinked, then price goes up. And that's what investment funds did. Also, FTX did, Alameda. They invested in startups with their token and had some vesting period. So startups couldn't sell their tokens immediately. Otherwise, they wouldn't, Alameda would not invest in them. And basically, yeah, startups on paper, they were rich, but in reality, they hold an asset that was at the end worthless. So that's really a funny part. So MMM scheme was the same story. So if everybody keeps investing and holding their shares, then yeah, it will go until somebody sells. Can shawarma shop increase the count of tokens? I mean, technically, yes, it can. Why not? But in order to convince investors to buy in the beginning, they need to explain them that they will be rich. And usually, that's how it's done. They approach people that they know and say, like, guys, let's make money on tokens, and please don't sell them immediately. Let's convince others to invest and then make this money. But amount of tokens doesn't really matter. It just should be fixed or has some limited inflation. And if you hear about burning of tokens, that's the same story. Like it just shrinks supply and obviously gives push to the price. How it should be done, like in reality, if you want to like make it right, then you need to make one type of a token for each asset. For the commodity, let's say one shawarma means one token, and its ratio is always fixed. It's like one coupon means one piece of good. Then token for your currency, which might be dollar, or maybe your loyalty, which is not tied to dollar, and for some type of investment contract for a share. So one token means one share. Then this type of Ponzi scheme cannot be built, so like at least so easily. No. And why it can be built? Because there was a mix fusion of security and payment mechanism, and that's prohibited in the real world. So my best example, people usually say, "Oh, why? That's a great idea. Like, why shouldn't we do this shawarma, thing?" And some people offered me, let's partner, like let's make some money. And yeah, that's fraud. In a traditional world, people go to jail for a long time for doing that. Really, it's manipulation of financial instruments and etc. etc. Basically, from a real world example would be that if Apple tells you, guys, if you pay with Apple stock that you can buy on exchange in their public company, you will get 50% discount for an iPhone. So everybody would rush to an exchange, buy the Apple stock, and pay less for an iPhone, but they will drive the price of the stock up, and total market cap can cover the costs of these discounts. So if you do it for a short time, then I mean, if they want to just make quick bucks, they can do it and disappear. I mean, Apple cannot disappear, and they are regulated, so they cannot do this trick. But with tokens, since it's not legally binding for anybody, if owner of the shawarma place wants to just go to Caribbean islands and forget about shawarmas, you can do it next day, and all these tokens will be worthless, and people have no claim to the company, even though they technically invested, and no court will help them, because it's just utility. So that's the thing. That's exactly what happened, and I'm glad I survived all these years being in a minority, telling people that they obviously can make money quickly, but at the end lost all their money. Some of them made billions and living happy life. But very uneven distribution. So this is how it should be like done. An example, like a vivid example. If you imagine a game, the decentralized game, where the creator maintains all the servers, provides service to the players, and players, just enjoy the game. Technically, the creator can make a decentralized version of a game where every user maintains like a copy of the server, like in Bitcoin, that maintains the full node. And a full node contains a ledger, the blockchain, that has all the user accounts and user assets, the game assets. And it's like peer-to-peer game. So now creator also maintains the same full node. It's no different than the others. The creator doesn't have any special like rights, except that he pushes the updates to the code. So the game has internal like gold. Every game has certain, internal asset, and it can be traded on exchange. It's not unusual thing. Like many games, like big games, have this. So their internal currencies traded for real currencies, fiat currencies. And how this gold is basically used. So every transaction, when users exchange something or they do battles, the small fee is like a tax is taken from an account and is accumulated to the account of the game creator. So technically, it's like in Bitcoin. You cannot avoid mining, fee, the transaction fee, because everybody uses the same, version of software, and these rules are imposed by everybody by consensus. So basically, creator can put this in the beginning when he launched the game. So tax, internal tax. And then the creator can issue another type of token, which is basically a stock. And the stock distributes these accumulated taxes to all investors proportionally. So there will be two types of tokens technically. One is the internal currency. It's not tied to dollar. It just may fluctuate a little bit. And the second type of token is the stock token that any basically player can invest, or external investors can invest and benefit from the game. And the third type of token is the game assets, basically the NFTs, so commodities. So like a sword or a shield is a token technically, because you can transfer it between users. It's exactly NFTs. So what we have here, the creator is no longer in control of a game fully. So he or she cannot change the rules of the game after it's published, unless it's approved by consensus. The game doesn't require servers, because every player is effectively a server that maintains the full copy of the game. Even if it, 100 gigabytes, it's feasible right now. Look at Bitcoin blockchain. Then it doesn't require any bank accounts. So the creator can live without creating a company and having a bank account. All his wealth will be accumulated in these currency tokens. And these currency tokens, because they will be traded on some exchange, can be translated into real like dollars or Bitcoin. So basically, it's type of a game that, like Bitcoin, is censorship resistant, is permissionless, and it's anonymous to a certain extent. And it's already possible to create such games, and people are working on that. Obviously, it's not easy. Each move in the game should be a transaction. Obviously, it takes a lot of, not even electricity, but processing power, but tools that allow that already on the way. So, and obviously for an investor, it's much better to invest in such company where the creator of the game cannot manipulate the profits and like income spendings. Everything is managed by the smart contract that is reached by consensus, that is calculated by consensus between all players. So in effect, investor can be fully sure that the creator cannot fool them. And it is kind of obviously how people make money here. People will make money if the game will attract more and more players and they will do more and more internal transactions. So like if GDP of the game will grow, effectively the tax, which could be like 0.1% on each transaction, is fixed, but the absolute amount will be bigger if the GDP of the game grows. So if amount of players shrinks, then obviously, people will start getting less and less dividends. So effectively, it's like a government, like it's a country, and it's tax office, which is smart contract powered, and dividends are paid automatically to investors of the country. Yeah, you've heard these stories about Rothschilds that behind of every central bank. Some type of this thing, but it's fully smart contract based. Somebody can say, yes, I can make a full copy of the game, right? Copying the full code, launching. Yes, but the copy of the game may not have the same amount of followers or players. Like Bitcoin Cash doesn't have any close amount of users than Bitcoin. So Ethereum Classic. So it's a free competition, but it's a fair competition. And yeah, there might be other ways to protect intellectual property here, but it's not the topic of this lecture. So that's how it should work. So you separate your original utility token to 2-3 parts, and then that's it. Like in that case, to the currency and the security. And it doesn't make sense for users to wish that currency token will grow. No, it should be on the same level, but the stock token may grow significantly, may fall, and people decide, okay, if I want just to play, I don't want to be an investor, I just want to play. I want this currency token to be more or less stable. That's how we want our currency in the country, to be more or less stable. But those who invest, they want their stock token to go up. So they will go and promote the game and whatever they want. So that's a prediction that everything will be tokenized. And it's easy to see now again, in 2018, that was kind of not so obvious. But right now, even like BlackRock even recently said, yeah, everything will be tokenized. Because it's just about technology, not about like some magic concept of making money. So every asset that you can think will be managed using cryptographic keys, that which will make people who understand all these technologies rich, because hopefully. For the normal traditional assets to be tokenized, you need to have one necessary condition, which was not called right now for many projects. That's why they failed. So the tokenization platform on that blockchain should be the primary source of information about ownership. If you try to tokenize land, but your tokenization system is not perceived officially or unofficially as a primary source of information about ownership, it's not a tokenization, it's just a fake. So we see right now, again, I'm so glad so many examples came up during these 5 years. Like, what is the primary registry for NFTs right now, the official one? It's Ethereum or like Polygon or Solana, if we talk about Solana NFTs. So there is no other asset, other registry. So people, if you say I have an NFT, people understand, okay, that's on Ethereum, so they make sense. If you show them your NFT on some other blah, blah, blah chain, which nobody knows, they will say, maybe it's not a real NFT, even though it has the same picture. Yeah. So people perceive certain, chains as official ones. It still makes sense to launch if, for example, a large animation studio launches an NFT platform with their own blockchain and convinces other animation studios to put their assets in there and trade in there, then that particular chain will become a primary source of information about animation type of NFTs, and it will be fine. They may not use Ethereum, that's okay. And I actually chose example of a game because it's a self-contained economy. Like if you take a country economy, it always depends on like imports, exports, trade. In a game, it doesn't have that, so it simplifies conditions. So I expect a lot of tokenized the games in 3-5 like years, and I think the biggest company in the world in like 7 to 10 years will be a game. So not Apple, not Google, but the game. And the best book about that so far I read is Ready Player One, and watch the movie as well. That's a great movie. Okay, so quickly we'll cover, you'll check the slides, the difference from traditional systems. Then token holders can prove their balances, and they can prove that the balance is the result of certain transactions, and there's no ambiguity about like how this balance appeared. In a blockchain world, we call that go to Genesis block and check all the chain of transactions. It's very easy to see who initiated transaction. In a traditional system, it's not. It's impossible. You have to trust somebody. So you can achieve non-repudiation, and nobody can change the account balance of the user without having the private key also. So integrity control. And that's the last slide, the open questions. Basically, people still want to create utility tokens because it became not a standard, but popular. So if we look at cars of 1960s, they all have like wings. So it's just fashion. So now the fashion is still with utility tokens. And maybe pretty sure later they will be obsolete. But so far, startups that need money right now, they often consider this way of, doing things with the intention that later they will deal with with it somehow. And some startups actually converted their utility tokens to stocks, or abandoned, or did the token exchange, switch, or whatever. So kind of everybody has its own level of business ethics. I'm not blaming anybody. So yeah, technically people tried to do a lot, and I know that stock market was also very wild. So startups that raised hundreds of millions of dollars during dot-com bubble also understood that they don't have any revenues and profits. How can they be valued billions? But they still raised, and some of them survived, and some of them, like is Amazon and Google. So the open questions is like, how do we, like, what degree of decentralization do we need to prevent like Ponzi schemes? Like, is Bitcoin Cash, good example? And how to measure this decentralization if we're dealing with anonymous systems? So really, like, how do you understand who are the real accounts and who is just bot-generated accounts? Because it actually is very important for your internal economy. And whoever watched my first lecture was the open question, how to build an open economy that is efficient. Nobody so far succeeded. Like Bitcoin is a super simple like economy thing. It's just digital commodity. It's not an even economy. Any game that wants to create such, like replicate an example that I just gave, will deal with really hard questions. And these questions are not, easy. They need to have certain level of inflation, because if more users come, there is demand for this token. So yeah. And you need to put this in the beginning into formula, into smart contract, and that's even more complicated. Yeah, so basically, how to create a central bank, your own central bank with smart contract. That will be solved, I'm pretty sure, but because central bankers are not that smart, so we could replicate them a little bit. Maybe there will be amendable smart contracts. Maybe the smart contracts will rely on certain economic parameters. You'll get inputs from oracles. Yeah, that's an open question. Yeah, basically, that's it. It's a very, not an easy lecture. So feel free to write me questions, ask right now, or write email, or in classroom. I'll try to answer. I know it's a controversial lecture, but I am right now is much more right than in 2018 when I first came up with this. These pictures of the game, I basically took our designer and said, do this, how to show the example. And now, again, after FTX, after all the ICOs collapse, I know that, okay, some people obviously still disagree. A lot of people disagree, but more and more agree with this opinion. Is it possible to have a primary source of ownership in the decentralized system? Yes, sure. It's this, and like primary source of information about Bitcoin is Bitcoin blockchain. That's it. It's decentralized. So you can say, again, Ethereum at a certain moment became the biggest and primary source of information about NFTs. OpenSea wants to challenge that. OpenSea actually created their own blockchain, and it may happen. So because they don't want to pay huge fees to Ethereum, I mean, they put it on users, but in order to make NFTs mass market, you cannot pay $50 for minting. That's impossible. Yeah, please ask. Yeah.
Okay. Good evening. I want to ask just two questions. First of all, the question is that token is determined at the time, which means that it doesn't change through the time. Because in standard web application, the tokens is actually changing.
I mean, is it a question to?
It's a question about the token itself.
No, I mean, just in traditional information security, there was this kind of token that you send to a server to prove that you know about the server, you communicated with it. It's a string of letters. In here, token is a representation of certain account and a balance.
Okay.
So when you say it's, I don't like the word token. It's too static, I would say, for the for this kind of phenomena. It just technically each system, like Bitcoin has UTXO model. It will be reviewed on next lectures. Ethereum has account-based model. These are completely different technologies to handle transactions. So token on Bitcoin and token on top of Bitcoin and token on top of Ethereum is technically built completely different way. So what I try to come up with is that you understand the concept of what token is. How it's implemented is a different story. Could be implemented as a transaction that is makes changes to two accounts in atomic way, like it does, or it could be implemented in a way that it just like append only database that doesn't change the past. So the balance, it just has some additional information and you need to read from top to down to see, to verify. So again, I would rather use the word balances and accounts than the word token, but yeah, it's already in there. That's fine.
Okay, so basically the token is just a string that contains some kind of information, as I'm right?
Token is an information, technically. It's a structure of that contains certain fields that usually has digital signature or public keys, and collectively all this structure, again, depending on the underlying blockchain, it's implemented in a different way. And looking at this using special software, you can see like in your wallet, the balance and your balance in which asset, and you can verify that it's true. So that's the token.
Okay, thanks.
So there are no special, like, coins that are somewhere out there that, you can count. No, unfortunately. Yeah, please, Alexei.
Thank you, Pavel. I have a question about the shawarma situation you told us about, and I was wondering about if we say that token somewhere between Thursday and the 100th days, let's say in the 50th day. So a token should be like $50 per token, right?
Approximately.
Yeah. And if somebody came to Shawarma and gives this token, he should get like 50 shawarmas, and the company should cover these expenses from this like previously raised money,
Yeah.
right?
Yep.
Now, so it should be like big amount of money to cover this, and these schemes are really working, and
it is
so
like look at tokens of centralized entities like exchanges that do exactly the same. They tell you, we will give you 25% discount on the trading fees if you pay with tokens, and we will burn them regularly, so you enjoy like shrinking supply. But they obviously burn the part that belongs to them. They don't burn your tokens. They shrink the amount in existence, but technically it's like if now is clear that 4 million Bitcoins is lost, then the supply of Bitcoin is not 21 million. It won't be 21 million. It will be 17 million, which means that, it will be one Bitcoin will cost more.
Yeah.
Actually, for Bitcoin, it didn't matter how many of them were issued in the beginning or planned, like even 21 billion, it will still fulfill its goal to do censorship resistant, permissionless, anonymous payments. So yes, one Bitcoin that cost $17, but that's still like you would just have more of them, and you will do payments, and again reach your goal with just more amount of Bitcoins.
Yeah. Thank you.
Yep. Please.
Hi, Pavel.
Hi.
Thanks. So I'm trying to formulate for myself the sort of the downsides of utility of having a utility token. And as far as I understand now, it's the sort of when the entity the issuing entity kind of incentivizes the users to use these tokens and in such way sort of pumps the price of them. Is that the core sort of downside that you were trying to explain to us?
It's it makes a perpetual money machine.
Yeah.
So the business is obviously using this market cap, can take loans, like FTX is a good example. The user gets shawarma that is twice cheaper, and the investors also enjoy like unlimited growth. But obviously, perpetual money machines don't exist. Somebody will pay at some moment. So like it's question who. I mean, obviously, we can say I am a business that doesn't want to run away. I want to be honest and never fool my clients. True, that's possible. That I will not. So even if this market cap exists, I will sell more and more tokens to users and have this economy. But what may happen? That you have one investor, and since the whole system is anonymous, then you can have an anonymous investor that will aggregate a large chunk of tokens, like let's say 80%, without my knowledge is the owner or user's knowledge, and then investor will manipulate prices.
Yeah, like CZ and FTX, sort of.
Yes. So and since system is anonymous, you cannot do anything. So that becomes a big issue. So technically, yes, I can see certain countermeasures, but it's like putting a fire, like trying to put away the fire using gasoline. Like more you try, more it will go up. And again, originally utility tokens were named in that way in order to kind of for regulators to not to look at them.
Mm-hmm.
And it's a normal decision. Like in Egypt, people build buildings that have slightly built top floor, but not finished. Why? Because not finished building tax needs to pay less taxes. And that's technically their way of avoiding higher taxes. And like all buildings are like not finished.
Mm-hmm.
So people do it all the time. But obviously we want to, like in ideal world, we live in a country where the laws are kind of predictable. Not even laws. I don't consider laws as somebody came up with the law. No, it's like we're a community. So like people will eventually be more or less decentralized in the way of decision making. So if we come up with certain rules, these rules should be, fair. And if somebody tries to avoid the rules, then, deliberately, then he or she should be punished. Or if the rules are not fair, like, Nazis, it was perfectly legal to kill Jews, right, in Nazi Germany, right? So, yeah, rules are not always ethical. So that's a question of, if rule is not ethical, then we should openly come and say, this rule is bad. We need to change it. And I think that's a good outcome of this ICO, like all this, industry, that it will show, it will democratize the investment, and it will kind of split the risks, and it will name the specific outcomes for each risk. So, for example, if I want to play in a casino and use the ICO project, I should be perfectly fine with that because I treat it as a casino. But if I spent the pension, money of my, if I spend pension money of my grandma and she relies on that for next 10 years, then, like it should be different. I should tell her explicitly, okay, I will lose your money with 19% possibility.
Okay, makes sense. Thank you. And so second question from the first one, to continue on the first one, is can we imagine a model in which the centralized or decentralized exchange has a token, maybe in such a way that you've explained, where a token is split into three different kinds of assets, but in which it doesn't create this sort of Ponzi scheme? Is it simply by not having an incentive to, say, for example, pay the trading fees with a discount in that token, and that would be it?
Yeah, look, if you created this DEX and you say DEX collects 1% of transaction fee, and this 1% of transaction fee is accumulated in the smart contract, and then this DEX has a DAO, right? So, and the DAO tokens represent kind of ownership or participation in profits, and this accumulated kind of fees will be distributed among DAO owners. I am full for this scheme, and good luck regulating that if it's anonymous, if it's managed by smart contract. And it's fine. It will disrupt regulation. It will disrupt finance for sure. And basically, if the DEX says, I want to incentivize my shareholders by giving them discounts to trade, that's also perfectly fine. where the problems comes in when you require users to buy certain token in order to work with your software. It's like, imagine that if you go to a shop to buy socks, and the shop asks you first to buy special, like, fluctuating, volatile, tradable mechanism, and then to pay with them for socks. That's like not right. But if, for example, I want to pay for socks with dollars, they accept. With hryvnias, they accept. If I'm a shareholder of this stock shop, I will get 10% discount for them. That's fine. So just don't combine financial instrument and investment instrument, like currency and security. So that's the recipe for, yeah, long-term success. So most of the ICO projects were not aimed for long-term success. They were there for quick money.
Makes sense. Thank you. I was just trying to apply this logic to some existing like bigger projects, like centralized exchanges, like, well, Coinbase doesn't even have a token because they're a public company, and they
too.
Yeah, exactly. We're not doing it. But then, like Binance, they don't necessarily make you pay trading fees in BNB. They more like claim that Binance Smart Chain is a whole ecosystem where you can build like these whole load of projects, but they still seem quite shady in that sense, because they they sort of push you into using the token still.
Yeah, we have another question about some IP rights. Can we tokenize this asset? I mean, you can tokenize any type of asset, even trademark, IP right. So if majority of people will accept the blockchain registry where NFTs represent trademark ownership, or easier example, domain name ownership, it's fine. You will, yeah, that's okay. The NFT sign doesn't change the underlying like essence of the process. It's again, from a legal perspective, from accounting perspective, it's the same. It's just technology is different. So you can tokenize anything, and just you need to convince others to use your system and to treat it as a primary source of information. Okay, any more questions?
Okay. Thank you very much. Thank you, Paul. Thanks, everyone. So I will add these materials to the classroom soon, and you will have your first task. This is a test. It is at the classroom, of course. And be careful, please. A deadline will be set for each test, and it is the next lecture. Okay, thank you very much, and see you soon. Thank
you.
Goodbye.
Good evening, good day. Yeah.
Thank you.
Bye. Thank you, guys. Bye.
Thank you.